Here's a market update for June 2nd, 2023. We'll go over the debt ceiling deal passing. The S&P rallies on Thursday, all sectors. We have an ADP jobs report that came in strong. An article survey from Goldman Sachs that wealthy investors are still holding high percentages of cash. And then the S&P is looking good. So good news for the stock market. The U.S. Senate has passed the debt limit bill in a 63 to 36 vote. So it was overwhelming support to raise the U.S. debt limit and allow government spending to continue. So it's good news. This was almost sure that this was going to happen. They have this issue every year or two where they try to scare the market. But the fact is, government wants to spend money and they have to spend money. So a non-issue, but it was hanging over the market, and we had the S&P rally when this news came in. So it was green across the board, very broad-based gains, everything from Microsoft and Apple to Tesla and other sectors, financials, energy, industrials, almost everything was green. This is encouraging because the narrative has been that only 5 or 6 companies are making the S&P go up. So the FANG, it's all Apple, Microsoft, Google, Meta, Amazon that was driving the gains. And now we're seeing a broad-based rally. I think next week, the narrative that it's only 5 or 6 stocks that are going to carry the market will fade. I think that'll be debunked, and you'll see a rally with a large number of stocks, and that will be a surprise to the market as well. The job market looks strong. This is an ADP national employment report that just came in. Private employers added 278,000 jobs in May. I believe the estimate by analysts was only 180,000, and we've come in at 278, which is much higher. Now, is this good news or bad news? I mean, obviously, strong jobs can cause inflation with wage pressure to the upside. So, I mean, typically it is good news to see the economy strengthening, but is this enough to make the Fed start raising rates again for fear of inflation? I'm not sure about that. It's possible we get a 0.25 rate rise this month, but it's about a 50-50 chance that happens. In either case, in my opinion, a strong economy is good. The Fed has been able to raise rates, and the U.S. economy is holding strong. The other issue is if we do get higher, let's say 5.25%, 5.5%, it gives more room for the Fed to cut in future if necessary. So the higher it goes at a sustainable rate, it gives more power for the Fed to cut if necessary later in the year or in 2024. An article from Ellie Perlman at Blue Lake Capital. There's an article from a Goldman Sachs survey saying that family offices and wealthy individuals are holding very high percentages of cash. Family offices currently have 12% of their portfolios in cash and cash equivalent holdings. This is high compared to other investors. Another survey quoted on CNBC today had the cash holdings of high net worth investors at 34%, so quite a bit higher. So interesting to look at those numbers. As I've discussed, in January of this year, 70% of analysts were bearish, and clearly this has affected high net worth individuals and family offices, and that's why they're holding so much cash. The question is if it turns out that they're wrong, that the Fed stops hiking, inflation is down, and stocks start to move higher, will this cash get redeployed, and will it cause a surge in the S&P and other asset prices? So update on the S&P chart. You can see we hit 4220 on the S&P as of Thursday. Things are looking good. I mean, we've got the debt ceiling has passed. We've got the jobs report coming in well. The Fed is likely not raising much higher. They might do one or two more. And so there's a lot of cash on the sidelines. The bears are definitely offside, at least in the short term. So looking at the chart here, who knows? Maybe we get a rocket up from the current level straight up to the 4,800 all-time highs. Who knows? As much as a few days ago, I was thinking it may be more of a grind. But the way the market's looking this week, you're seeing a lot of enthusiasm and a lot of bearishness getting sort of washed out of the market, in my opinion. Thanks for listening. You can follow me on Twitter at Gresham's Law 7.